Morning.
Good morning.
Morning. Can everybody hear me okay?
Yes.
Yes, thanks.
Morning, everyone.
Morning.
Lazaro, it's Lori. I just need a couple minutes for the streaming, okay?
Yes. Yeah, let me know when you're ready. Lori, I'll be right back. I'm gonna grab some reading glasses.
Okay.
Good morning, everybody. This is a test. I've been having some technical difficulties. Can you hear me?
We
Yes.
can hear you. Yeah.
Oh, okay. Yeah, I'm not going to be video. I'm in travel right now, and like I said, I've been having a little bit of technical difficulties, so I don't want to risk it. Thank you.
Lori, are we ready with streaming and ready to call the meeting to order?
We are. Yep.
All right, great. Well, good morning, everybody. I'd like to call the meeting to order. Welcome to the February 28th regular meeting of the West Hartford Pension Board. My name is Lazaro Guzman, and I am the chair of the board. This meeting is being conducted in a virtual format in accordance with the Freedom of Information Act as amended by Public Act number 21-2, which authorizes municipalities to conduct public meetings virtually. Members of the public can view the meeting live on West Hartford Community Television at www.whctv.org and www.youtube.com/WHCTV5. The meeting is also being recorded for on-demand viewing and will be available on the town's website for at least 45 days. Since we're conducting this meeting in a virtual format, there are some special rules and procedures that I need to cover before we begin. First, I ask all participants to mute your device when you're not speaking. If you wish to be recognized, please raise your hand and I will call on you in the order I see hands raised. If you are participating by audio only, or I do not call on you and the debate is ending, then unmute your phone and let me know so that I can recognize you. Second, main motions will be made by me and no second is necessary. We will proceed immediately to debate. These include motions to adopt, receive, or approve business items. Subsidiary motions still require a second. These include motions to amend. A member must be recognized before making a subsidiary motion, but any member can second the motion by just unmuting their line and saying second. Third, all speakers must make a good faith effort to state the person's name and title at the outset of each occasion that such person participates in the meeting. Fourth, all votes must be taken by roll call unless the vote is unanimous. Fifth, a reminder that if any participant has a problem with connectivity, you should immediately call Lori Kearney, whose phone number you were provided earlier. She will let me know and we will recess the meeting while the problem is resolved. If it cannot be resolved quickly, we will ask you to call into the meeting using a phone and participate via audio only. Lori, if you could now do the roll, please.
Sure. Lori Kearney, Clerk of the Board. Lazaro Guzman,
Present.
Perry Salonia,
Here.
Al Lebo,
Here.
Peter Privitera.
Here.
Brittany McGilpin is not able to attend today. She had let me know last week. Mayor Cantor. Rick Ledwith,
Here.
Chris Kachmar,
Here.
Paula Kanaki.
Here.
Mary Fay present. Okay, absent. Okay, Lazaro, we're all set. Is there anybody, actually one more thing. Is there anyone who's attending whose name I have not called? Okay, we're good to go, Lazaro. Thank you.
All right, thanks, Lori. I guess before we turn it on over to Chris to speak about investments, I've got here election of the clerk of the board. So Lori, do you want to take that?
Well, certainly. So we would like to nominate Paula Kanaki, who is the Pension Benefits Coordinator in the Human Resources Department. Would like to present her for the Clerk of the Board, so she would replace me.
Motion to elect Paula Kanaki to the board. Actually, I'm sorry. So we don't need a motion. So what I'd like to do is make a motion to unanimously vote her into the board, unless there are any objections. So we don't have to do the roll. Any objections? No objections. So motion carries.
Welcome, Paula.
Thank you.
Yes, welcome. Next, Chris is going to give us an investment review and economic update. Chris, I'll turn it over to you.
Great, thanks, Mr. Chairman. Good morning, folks. And Lori, are we going to bring up the deck to you?
Give it a go. Sure.
And we'll catch up, obviously, on markets and all things investing. As Lori pulls that up, I think everyone fully appreciates, right, that the narrative has changed pretty meaningfully. Not only some of the headline challenges that we began the year with, of course, whether that's the Fed message and the evolving a stimulus approach there, or nettlesome levels of inflation and higher interest rates as the year took hold. We obviously have more recently the unfortunate situation in the Ukraine, and that has obviously put some pressure on markets as well. Just at the highest level this morning, as we begin the conversation, just a couple of numbers for you. Some of this is not in the reporting, but it's good perspective for us as we work through the detail. So bonds year to date through Friday night are down about 4%. That's the aggregate bond index. The S&P as of Friday night was down about 7.8% year to date. Small cap stocks in the US were down just shy of 9% year to date, I think 8.99%. And interestingly enough, international equities on a relative basis anyways, were holding up a bit better as of Friday night, down about 5.6%. And emerging markets actually down even a little bit less than that. So obviously the narrative has shifted pretty meaningfully, and the challenge, of course, is not so much Russia as a major player in international capital markets, but obviously the linkage there is to the energy complex. And I think a lot of folks like ourselves, and I'm sure yourselves, are wondering, does their involvement there push the energy complex into an imbalance that starts to pressure some of the prospects for growth more broadly, which is the year began, you'll remember, was still reasonably constructive for GDP growth around the world. So that's something we'll talk about a little bit and weave into our conversations here. And it looks like, Lori, it's just coming up.
I'm having some difficulties here.
Yeah, I'm sorry for this, folks. Our systems don't support WebEx, so for some reason I can't seem to pull it up on my screen. If you can't get it up, we can just pull it up individually and make reference if that works for folks as well.
Give me one moment. Trying another way. Can you see that?
There it is. Perfect.
Excellent.
If you could scroll down to that first page, there you go. One more, if you would, Lori. One more, and then you've got there we go, right there. Perfect. One back there.
Page 5, or did you want page 4?
Could you page 4, please, if you would?
Sure.
So there's just the landscape, right, that we made mention of. The month of January, obviously pressure on capital markets as well, by and large, both higher interest rates, as we talked about, spreads and fixed income moved a little bit higher. And then obviously, this is prior to, of course, the onset of the conflict. There were pressures around monetary policy and inflation levels pressing and weighing on equity market sentiment around the world. So it was a negative month for January, and it's been a bit the same in the month of February to date. If you would scroll ahead, I think, Lori, and just in the interest here, I think keep scrolling ahead here, because this information just all backfills some of the high level inquiry. We can use it as needed. So here's the portfolio, the pension portfolio at the end of January. Reasonably close to target, as you can see, about $420 million of invested assets. We've completed, as you know, 3 of the 6 planned dollar cost averaging efforts, and we'll talk about the next one momentarily. The lineup for what it is in good working order, and no particular concerns in terms of statuses across the managers. You'll remember we did have, coming into year end, Met West, one of your fixed income managers, on discuss with a portfolio manager retirement, but that has, in the work our analysts have done, gone just entirely consistently with our expectation, and it's moved back to maintain, and the team there that remains is experienced and in good working order. So that's the portfolio at the end of January. If we could skip, Lori, one page ahead, you do see there, so we're down about 4%, the portfolio in the month of January, about what the benchmarks did, as you see there, and holding on to decent relative numbers longer term, right? When you look at the 3 and the 5 year, for example, the portfolio generating pretty solid absolute returns and certainly holding serve versus the benchmarks. So that is pension. If we could skip, Lori, just quickly, if you would, to there's just the manager detail there. If you could continue to scroll ahead just to show the board. There it is. So there's the DCA pool. You see we've got about $157 million left. We are confined to those 3 relatively short fixed income strategies. You'll remember there was an appetite from the board to have a little bit of a higher yield profile with the Vanguard strategy, but all in very liquid, very pretty much dialed down, but certainly on the surface, right? The pressures here exist to an extent as well in terms of higher rates. So when you segue over onto the next page, Lori, if you would, yeah, I don't know that there's really too much to do here just yet, right? But you do see the portfolio just down nominally since its inception. You know, that's the backdrop of higher rates, and we'll see what happens with rates, you know, actually down a bit this morning, and to the extent that they settle down and the managers are able to earn out in their portfolios through the balance of the program. You know, we should have the restoration of those absolute numbers to something more palatable. But that's the DCA program kind of running, all three managers in line with expectation, and no particular concerns on that front. So I do want to, in our agenda, we do have some time reserved for this forthcoming DCA effort that's scheduled per our timeframe construct, the end of March. We'll talk about that in just a moment. But before we kind of jump through the information here elsewhere, are there any questions from folks on markets generally, performance or managers within either of the two pools?
No questions at this point, Chris. I know, you know, you had some thoughts with the dollar cost averaging. Maybe just, you know, I also know that you had some comments just on the unfortunate events in Ukraine. So maybe just at some point before you sort of make any recommendations on the dollar cost averaging, maybe kind of give us some more in-depth thoughts on how you and your team are thinking about the markets in light of current events.
Yeah, well, certainly. Thanks, Lazaro. Absolutely. And we'll disseminate this. We had sent over to Lori and the chair a piece that we had written, a colleague had written the end of last week, and we'll get that out to the full board this morning after the meeting. It does speak to, you know, obviously the circumstances in Russia, obviously being a challenging one, and certainly, right, ones that continue to likely elicit more in the way of capital market activity, volatility, excuse me, and probably near-term headwinds in the markets. It's interesting if you go back through time, and again, I won't speak to the humanitarian challenges for sure, but if you go back through time, I think you can catalog something like 12 of these type of geopolitical events. I think the Suez Canal back in the 40s crisis was the first of those. And if you look through time, when the economic backdrop remains resilient, which is our kind of baseline case to the extent that we get through this thing okay, the vast majority of time markets continue to perform pretty well, and they overcome the hurdles and some of the, you know, pressures immediately around such events. I think 9 of those 12 events have had positive returns 12 months later in equity markets, and the 3 that didn't were all linked to outright recessions. And again, so that's, you know, probably the fulcrum point here going forward is whether, you know, the energy situation becomes so unwound that starts to put pressure on the fund, you know, the economic fundamentals, which you know, is not our central case even as we sit here this morning, although obviously something to be wary of. So I think the takeaway from the chair's inquiries perspective, right, capital market volatility likely remain elevated. You know, we obviously are down, as we mentioned, right, 6, 7, 8% in equities year to date, 4% for fixed income. You know, we still think there may be a footprint through here if there's a resolution on the conflict front. To okay returns in the back half of the calendar year for all those fundamental economic reasons that I mentioned. So that's really the backdrop there. And the one thing, maybe just segueing into it, we can jump around a little bit here on the agenda. We did provide a schedule just to show the board what an escalated, you know, DCA round 4 might look like. If you scroll, Lori, all the way to the back of the deck, if you wouldn't mind, there's a schedule there. And I know we talked, there it is, thank you. You know, we talked, I think, pretty explicitly about the idea of a time construct, right? A disciplined time construct, quarter over quarter. But I offer up to the board, at least for their consideration and discussion, are we at levels now that would justify or warrant consideration of accelerating the next placement of monies into the pension trust, just by virtue of what's gone on in markets over the last couple of month and a half, 2 months now, I guess, start to finish. So we're not technically in correction territory. We've whispered at that a couple times, right? But the market's the undercurrent has proven to be pretty resilient, so we're hovering right around it. So I don't have a definitive answer here, but you do see what we've done in the program or the schedule is you have a very liquid structure, as you know, so you could put monies to work with 1 or 2 exceptions very rapidly. And I thought it made sense to offer up to the board at least the opportunity to discuss that possibility, and whether you felt strongly enough or there was any type of momentum for escalating some of these monies into the pension trust by virtue of what's going on with markets. So, Mr. Chairman, maybe I'll pause there for just a minute and let people digest that for a second.
I see that Peter has a question. Peter?
Thank you, Mr. Chairman. Chris, when you say accelerate the dollar cost averaging, can you define that? I mean,
Yeah,
is
so
it
simply
putting more money in up, or is it just putting money in at a faster period of time, like rather than waiting a quarter, do it on a monthly?
Well, it's the latter period, Peter, right? So it would just be this next round, right? If we don't do anything, will happen innately at the end of March, right? We do it every quarter. We did one at the end of December, of course. So really, it's not putting more monies into the system. Ultimately, it's just the timing of that money and whether there's some, a school of thought to, to buy and put monies to work when markets are down a bit. Obviously, that, is a long-term discipline that likely works in favor of the trust and its returns over the long haul. We obviously don't know, right? When there's no way to know whether markets may continue to consolidate here over the course of the next few weeks. There's no possible way to know that, but we do know what has transpired to date. So the simple answer is, Peter, just accelerating the monies, not changing the amount. And we would essentially be moving up, the month of the Marches round into real time now, if you so chose. And then we could revert back to that, the remaining 2, we'd revert back to that, June, September schedule, and again, have this discussion, in real time, given whatever the circumstances in the markets are.
Yeah, I I think that's a good idea. However, I think that whatever's going to happen is in a critical phase right now because more aggressive sanctions are going in, and now the Russians are talking about sitting down with the Ukrainians and talking about ceasefire. But the question is, whether the Russians are going to blink and is this going to go away, or is it going to get even worse? So that's a tough call. But I do agree that just putting my 2 cents in, that I believe we should accelerate to some reasonable point the DCA program.
I've got some comments, but want to give the other folks on the board thank you, Peter. Any other comments related to the possibility of accelerating? So Chris, we're talking about the 54 million that would would normally have gone in at the end, towards the end of March, early April, potentially accelerating that tranche, correct?
Correct.
Okay. And keeping everything, at least for now, the same. Other folks, comments, questions for Chris? You know, my thoughts, you know, similar to Peter's, you know, I do think it's a good idea. I mean, you know, buying low sometimes means buying you know, when there's some sort of crisis or correction or something going on in the markets that's driving lower prices. You know, my question for you, Chris, would your recommendation be to do, you know, all 54 million at the beginning of March? Another alternative that I'll put out there is, you know, we do half at the beginning of March, and then we of the 54 million, and then we do the other half per the original schedule, which would be, you know, end of March, early April.
Yeah, that's a you know, an interesting suggestion for sure, and certainly one that we could accommodate if the board had a desire maybe to split the you know, the pacing of the proceeds. You know, mechanically, we would just, you know, split the schedule here in half and do the work accordingly. So that's an interesting suggestion, Mr. Chairman, and we certainly wouldn't stand in the way of that if that was a preference of the board. And mechanically, we could make it happen with Peter and Lisa and the team as well.
Yeah, and I mean, again, you know, maybe doing it all now is, you know, who knows which one is better. But things do seem to be getting worse unless something changes, you know, quickly as a result of these talks. Things do seem to be getting worse, not better. And that's the only reason, you know, I'm sort of suggesting we break it up, still take advantage of some of the lower prices, but at the same time, you know, kind of wait for next step, maybe a month, and see where things are at that point. I guess in terms of process, any preferences, or should I just make, I guess, are we at a point where we're ready to make a motion one way or another?
Lazaro, this is Perry, pension board member. I'm fully on board with advancing half of it. You know, I think, you know, if we're deviating from the original plan, I think doing it not in total seems a little bit, you know, less taking a position on the market. And then also, you know, I don't think anybody here is convinced that this is, you know, going to correct itself within the next month. So, you know, it could be very volatile over the next 3 months for all we know. So I think just moving half of it makes all the sense in the world from my perspective.
Okay. Why don't I do the, thank you, Perry. What I'll do is I'll make a motion to do half and for this next tranche to do half and half. If folks want to do the full, they, you know, they can vote nay and just say that, you know, you'd rather do the full amount, and then we'll sort of see where we end up from a vote perspective. Anything else before I make the motion, Chris? Anything else, just in terms of with respect to the dollar cost averaging that I should incorporate in the motion?
No, Mr. Chairman, I think you've got everything.
Okay, thanks, Chris. So I'll make a motion to accelerate the dollar cost averaging this next tranche, which was scheduled to be about 54 million. Instead of it having go in at the end of March, we'll accelerate half of it to, you know, as soon as administratively possible here in the next couple of days, and then the other half as originally scheduled. Why don't we, the motion's not for unit, so why don't we take a roll, Lori, on that one?
Okay, Peter Privitera,
Yes.
Al Lebo,
I vote in favor. I just want to make sure that this is perfectly clarified. The idea here is there are 3 tranches left. This first tranche, we're going to split in half and do half of it now, and half of it is regular schedule at the end of March. The 2 other tranches will go in as they had been scheduled, which is what's that, 3 months later and 3 months after that. Unless we subsequently vote to change those in the future. So just want to make sure that understanding is correct.
Yes.
Okay, yep, I'm in favor.
Perry Solonian,
Yes.
and Lazaro Guzman.
Yes.
Okay, motion carries.
All right.
The only other thing, Mr. Chairman, I had per the agenda, I think you had asked, just to provide again for the board's edification, I think that the peer fee schedule, remember, this is our ongoing conversation. Peer's the manager that has the incentive structure in terms of performance, and a lower base fee as a result. I think that schedule, Lori, right, should be a couple pages prior to the one you have up on the screen. And you'll remember the history there is these numbers are small, we understand, but if you go one forward, that's it. Thanks, Lori. The structures had been running largely in parity in terms of the comparison of a flat fee versus the incentive fee, which again, you have the option as a board to use either one, until the last 2 years. And the last 2 years, calendar years, have been extraordinarily strong ones for peer. So you can see there when you do the arithmetic, it has resulted in, a little bit of a higher fee, all things equal, by virtue of their very strong performance. If you, Lori, if you would scroll back just to show the board, because I think it's important, to the track record for peer, just in isolation, if you would, keep scrolling back in the deck. We're going to go all the way back to the performance update section. And if you scroll, keep going a little bit more. Thank you. It might be one more page and then one more. There it is. If you would, no, scroll down if you would. It's just that pages with the manager. And I don't see it. Can you, it's a little bit lower on this page. Lori, I don't know if the board, there it is. There it is. Thank you. So you can see there, this is the performance of peer through January. Right. So I'm not going to spend any time on the immediate numbers, but when you look at the 3, the 5 year, the since inception number in particular, right, these are net of all their fees. They've consistently generated pretty meaningful excess return. So again, this is a philosophical thing, right? There's not a right or wrong answer here necessarily. I know when we've tested it most recently with the board, I think there was a collective a satisfaction, if you will, for lack of a better term, with the current arrangement, and you decided to keep it, which again is perfectly fine to us, is perfectly fine to peer, but at a point in time, to the extent you wanted to move to a flat fee arrangement, that flexibility is always available to the board. So I don't know, Mr. Chairman, what you want to do beyond that, other than just kind of rescoring and reminding the board of some of those details. But I know it was on the agenda, so we wanted to touch on it briefly.
Yeah, no, thank you for that, Chris. And just for maybe some of the folks who have been on the board last time, this is something that I know, has come up several times in the past, at least during my time on the board. And for, as Chris said, throughout the history, most of the time the two were much closer. And, I think previous rationale was, if the manager is outperforming, then we didn't really have much of an issue in terms of paying them more, as long as the performance was there. And so that's, when we looked at the numbers, they've delivered a ton of outperformance over the years. I think we can go to a flat fee. From my perspective, I don't think it's going to change how the managers manage the portfolio. They've got a strategy. My thoughts are they're probably going to manage the strategy pretty consistently for all clients. They've got a couple of fee structures like this, I think you said, Chris. And do most folks, I think you might have commented on this in the past, do most of their clients have more of a flat fee, or I'm not sure if you know the answer to that?
Yeah, I think it's a mix. I think it's a mix. I would say for folks, right, just the background is it's a more common arrangement in Europe for incentive fees for traditional public equities than it is here in the US. And Peer has its very original groundings as a European entity, although they've been based now in the States for quite some time. But anyways, I do think they have a collection, Mr. Chairman, of folks like yourselves that use the incentive arrangement. I could get you the exact breakout. I would say my intuition would suggest that it's probably skewed towards flat fee.
Okay.
Most institutional clients in the US are probably more accustomed to that arrangement. But they have both and can accommodate both, obviously.
Thank you. And I think the other important point that I'll make is, you know, in more recent years, we've been paying more because there's been greater outperformance. But in future years, the way that fee is structured, if they have bad years, it doesn't just mean that in a future good year, we automatically pay more. They have to make up for, if they have underperformance, they have to make up for the underperformance first in previous years before they collect the higher, the performance fee. So I'll pause there again. I think we've looked at this for many years. Maybe, I don't know, Peter, you've been on the board way longer than I have. I think this portfolio's been part of the strategy's been part of the portfolio for many years, and it's something that's been bounced around, and we always landed on, paying the performance fee.
Yeah, Pete Privitera, Finance Director. Yes, Mr. Chairman, we've been debating this for the last 10 years, I believe. So we always seem to land on let's keep the status quo.
Okay.
But yes, it usually comes up whenever we have a good year and there's a large bill that has to be paid, and people are scratching their heads and saying, "Wow, this is a big bill." But realistically speaking, when you look at the asset growth that goes along with it, then you kind of like temper your comments. So yes, it comes up. It comes up in good years, not really in bad years. So that's what we've been used to. Thank you.
Okay. Thank you, Peter. I'm not sure. Well, you know what I'll do? I'll take this opportunity. I'm not sure when the last time we voted on it. Maybe it makes sense just to take an official vote here, just because I think the momentum has been to keep it status quo. I'll make a motion to keep it status quo, unless there's any objections on the part of the committee. So motion to continue. I know this came up last time when we had a bigger bill, but and we approved it, but just going forward, make a motion to keep the fee structure the same. Sorry, Alan, you have a question before we proceed to vote? Go ahead.
Thank you, Laz. Al Lebo, board member. Chris, can you clarify for me, please? The flat fee would be 1%, and the fee that we have paid them over this period of time looks to me like, I don't know, maybe around 1.2% or something like that.
Yeah, it's exactly. So the incentive structure is a 40 basis point flat fee versus the 1% all-in flat fee, and then they capture 20% of the outperformance, as the chair mentioned, subject to those high water marks, right? They've got to return any capital before they're able to generate incremental. So it's the 40 plus 20% of outperformance versus 1% flat.
But that has
So I think you're right. The arithmetic, if you do the schedule, brings you, I think, about, Alan, to what you mentioned, right? All in.
okay. I mean, from my perspective, 100 basis points is exorbitant to start with, and 120 makes it worse. So, my objection to this, and I continue to have that opinion.
Right, and then just I'd remind everybody that the performance that we saw before, all of that performance was all net of even the 1.2 that it seems like we've paid historically, and accounting for the good and the bad, and the regular years. So why don't we just, to formalize this, I know maybe there were some questions after the last invoice. which did get approved, but just wanted to make sure that folks, remain comfortable, or if, if there's a preference to change, that we address that here. Any other questions before we proceed with the vote? So I'll make a motion again to just keep the fee structure status quo.
Okay. Lori Kearney. Peter Privitera.
Yes, I agree.
Al Lebo.
I oppose.
Perry Salonia.
Yes.
And Lazaro Guzman.
Yes.
Okay, motion carries.
All right. Anything else, Chris?
The last thing, Mr. Chairman, and I want to be sensitive, I know, to your larger agenda. I think the board had charged us at the last meeting. You'll remember we had introduced our new capital market assumptions, and we had put the portfolio through our optimization framework. And I think there was a call for looking at a high level, some alternative allocations. And so if you could, Lori, scroll ahead, and I won't spend much time at all on this. We'll just show you the outcome so you've got it for the record. I don't think there's an actionable item. It should be, Lori, maybe keep one more page ahead, perhaps. There it is. So the existing portfolio, the 70-30 construct that we're all familiar with, you see highlighted in the kind of the light blue hashed columns there. The portfolio annualizes over a 20-year forecast period to something akin to 6.6%. I think there was a question maybe to look at perhaps more conservative allocations. So we've done that there, as you see, just controlling in options B and C for more fixed income, essentially at the expense of equities. No surprises, right? You draw down, generally draw down or equate to what you've got currently. We did let the optimizer just under the hood. It's kind of a nuanced thing. We did let it kind of re-profile within your global equities just to see where the model would take it. But nonetheless, you see the outcomes there for more conservative mixes. And then we let the model just run fully unconstrained, right? Just let it run into all different types of asset classes, even things the board doesn't use currently, just to show you that comp as well, and some of the related statistics. So I think the takeaway from this page, as we concluded at our meeting last month, was that the portfolio's allocation is generally in good working order, right? And at least from our assumptions perspective, provides the portfolio and the trust real opportunity to generate returns consistent with your actuarial expectations. So, Mr. Chair, I don't think there's an action item here, but I do think that you had asked us to run those numbers just so you had them for comparison's sake.
Yeah, no, thanks, Chris. And at least as I look at this, I think some of the alternatives, I think at some point, maybe it's and maybe that's today. I know we still have another part of the agenda to go through. Based on what we're looking at here, there are opportunities to keep the expected return about the same and reduce risk profile. And then there's opportunities to lower the expected return a little bit, and then lower the expected volatility even more. So I think those things are worth considering in more depth. Initially, my thoughts are that as I look at the alternatives, a lot of the alternatives have higher fixed income. So we'd be reducing our equity exposure. And we just voted to sort of accelerate the next tranche because we're looking at where the markets are and sort of maybe take advantage of some lower prices. So maybe this is something for the next time that I think longer term. I think maybe some tweaks make sense. One of the questions that I'd have, I'm not sure we'd go to D, but there's a meaningful increase here in real assets. and alternatives that I at least would like to understand a little bit better, even if we didn't go all the way. Just when I look at that percentage of real assets and alternatives, really interested in sort of what what are some of the opportunities that you're seeing, and what drove that kind of that kind of recommendation or recommended allocation. So again, I know we've only got 30 minutes, and maybe that's a tough task to do it in short term. So maybe we table that for another meeting.
Thanks, Mr. Chairman. Chris Kachmar, Fiducient Advisors. That's a perfect segue, right? Just as you suggest, I do think that the unconstrained Model D, right, would have to come with advanced education for the board and a comfort level, because it does introduce asset class strategies, areas of the market, however you want to frame it, right, that you haven't been accustomed to investing in, and by all means, I think we'd have to do a decent amount of work there and unpack those areas to make sure that you were comfortable with them. I do think, right, as you obviously as a board oversee a substantial pool of assets now, let's call it for discussion's sake, $700 million. And $700 million asset pools, typically at least scratch the surface on things other than, equities, traditional equities and fixed income. I think you all know that. Even in a public fund or a municipal setting, that's the case to a large extent. So I'll accept the chair's directive there if no one objects, and we'll begin to maybe put some specifics around these different asset classes, how they work, how you might consider looking at them in the coming months and meetings, if that's okay.
Great, thanks, Chris. Are there other just sort of to make sure that the next meeting folks get a lot of their questions answered? Are there other things, other thoughts, questions that we might want Chris to think about for the next time? Alan, proceed.
Lebo board member. Yeah, Chris, I wonder if in addition to what you've shown here, if you could also indicate what kind of fees are associated with some of the new investment types that you're suggesting here. Obviously, we just had a discussion about fees. I'd be interested to know what this would mean as far as those fees go.
Chris Kachmar, Fiducient. Absolutely, Alan. Yeah, we will definitely provide you that perspective as well.
All right, anybody else? All right, anything else, Chris?
No, sir.
All right, thank you. Back to. All right, next on the agenda, we've got Peter Privitera, Director of Finance. Peter?
Thank you, Mr. Chairman. At the last meeting, I was asked to provide a list of expenses that I review, and I just want to clarify that I only review the professional services bills that come in. So the memo that I sent, that you all have a copy of in the packet, shows the 5 professional service areas that we review. And once I get the bill, I talk to Chris about it, and if it's if it's accurate, then we move forward on it, or I'll refer to a contract and make sure that it's within contract parameters. There are other bills that come in that I do not see, that Lori might see or Paula might see and pay, administrative bills. And I think what happened was, and Ali, correct me if I'm wrong, but last month a bill came to the board for approval, and that bill was associated with a software portal that allows retirees to log on and look at their retirement check and look at any of the allocations they have in that check with respect to taxes or whatever. And that was being charged to the pension, a portion that's related to the retirees. I never saw that because that was more of an administrative charge rather than a professional service charge. Well, on that particular charge, and Laura, you can correct me if I'm wrong, but when the town moved over to the new Munis software, it was decided that we would leave that portal open for retirees and active employees for a period of 6 months. So if anyone wanted to go back and check, what were my earnings last, before we moved over to the new software system, they could access that and they can see because we have our payroll information on 2 systems now. But I believe over the next month or so, we're going to migrate everyone over to our new system, including the pensioners. So that was a bill that I wasn't really monitoring, and I know Lori has a memo in the packet related to a cost that her office pays for directly death monitoring services. So Al, I wasn't sure if that's what you were looking for, but if it's more than that, certainly we can run all kinds of reports, but there are a lot of administrative fees that human resources, the pension component of it will pay directly that I don't approve or sign off on.
Al.
Yeah, Lebo, board member. No, Peter, this is the kind of thing I was looking for. I was just trying to understand what all expenses, the board might see throughout the year, right? And get an indication. Yeah, I mean, I didn't know what that cost was last time, and I was surprised to see it. I just wanted to get a list of, what kinds of costs are we likely to see in any particular, meeting. So it looks to me, looking at this quickly, that there's, investment expenses associated with Fiducient and Wells Fargo. There's actuarial services. There's legal fees of various types, and then there's auditing. And then I guess what's not sort of listed on here, as you mentioned, is there are some administrative services that we might come across. So you don't see those, but that's the only other thing on here, as well as investment fees. That's the only other thing that would be missing from this. Is that right?
Pete Privitera, Finance Director for the town and board member. Yes, Al, like the fee that you saw at the last meeting, that we would not normally send that to the board for approval. And the fee that Lori identified, the death monitoring cost, it's more of a contractual service, not a professional type service. So historically, that didn't go to the board. And I'm sure there's more fees for, supplies and materials for administration of pension, pension administration costs that normally would not go to the board for approval.
Peter, is it fair to say though that the fees that you've listed here in terms of materiality, these are the bigger fees, and there might be other administrative fees, but just in terms of size, I'm guessing that they don't compare, they're not as large as what we show here, so they're much smaller.
Yes, Pete Privitera, Finance Director and board member. I mean, there are other charges to the pension fund. For instance, administrative services. People who work on the pension fund full time. For instance, like Paula, her time is charged to the pension fund. There is an allocation for administrative services. All the work that my office does in regards to working on pension issues, a portion of that is charged to it as well. But these are the, for all intents and purposes, these are the largest professional service fees that are outside of it, what I would term as administration of the plan.
Okay, thanks. Al?
Aldi, board member, and those additional administrative services you just mentioned, do we vote on those, or do those just automatically sort of flow through?
We don't vote on those. What happens is every year the town adopts a budget, and there are allocations of time charged to the pension fund. I guess we look at it this way. There's a choice to be made. You either hire an outside contractor for administration of the service, or you do it with in-house staff and you charge a portion of their time to the pension fund. You know, I'm sure that, you know, years ago, it was considered more cost efficient to use existing staff to, you know, to perform administrative services for the fund. No, you don't normally vote on it. I've never seen this board vote on a budget for administration of pension services. I haven't seen that.
Any other questions for Peter? Thanks. Thanks, Peter. Give me 1 second here. Next on the agenda, Brittany Bermingham, Town Matters.
She's absent today.
All right. Lori, you're next. Meeting
Sure.
schedule and pension
Sure.
administration.
Okay. Lori Kearney. So we have today's meeting, and then we have a break for a couple of months, and the next scheduled meeting of the pension board is May 6th. And I know that the meetings we had planned, they'd be conducted virtually, and they can be through April. So I'm not sure how, you know, what kind of changes the next couple months will bring in terms of format or direction regarding the meetings, but so more information will need to be provided as we approach that meeting.
Okay, so it sounds like maybe for May, at least if things progress as we think they might, our May meeting might be in person in the town hall.
Yeah, I'm looking for some direction from the town clerk's office.
Okay.
And then I'm not sure if it'll be left up to each individual board or if it'll be required that they all return to in-person meetings. I don't know.
Okay, understood. Okay, so we'll wait to hear more on that. Pension administration.
Sure. So in terms of pension administration this month, we present 4 new members for pension board approval. There are 2 refunds that we've processed for non-vested participants in Part E of the pension plan. We have 1 vested interest application for board approval. Someone who reached the 5-year vesting point and elected to keep his pension contributions with the town for a future benefit. And then we have 5 normal retirements. So this particular business, there's nothing nothing out of the ordinary to report to the board.
Okay. Are we looking for motion to approve pension administration, Lori?
Yes.
Motion to unanimously approve all items in pension administration. Does anybody object? Hearing no objections, motion carries.
I just realized we didn't talk about the approval of the minutes for January, so we need to back.
Yep. All right, everybody, the minutes were in your packet. Motion to approve the minutes for the special meeting held on Monday, January 24th, 2022. Motion is to approve unanimously unless there are objections. No objections. Motion carries, Lori.
Okay, great, thank you.
You're welcome. And I think we've got some invoices next.
Yes, there are two invoices, one for Fiducient Advisors. A portion of the annual consulting fee for the fourth quarter 2021. And then Silvercross. Management fees for ending March 31st, 2022.
Okay, motion to approve payment of the items under invoices for consideration. Again, if there are no objections, we'll carry that motion unanimously. Any objections? No objections, Lori.
Okay, great. Motion carries.
Thank you. Do we have any new business? Anything that folks want to bring up? Doesn't sound like it. With that, I will make a motion to adjourn via unanimous consent. Any objections to adjournment? If not, well, thank you, everybody. We had a lot of good dialogue today, and thank you for all the presentations. It was good to see everybody. Hopefully, next time we'll be able to get together in person pretty soon here.
All right. Thank you.
Absolutely.
Thanks, everybody.
Take care, everybody.
Have a good week. Bye, folks.
Bye.